Good morning and welcome to Morning Markets with True Potential. Today we'll be focusing on what was behind markets moves yesterday, but in particular we focus on improving German sentiment data which came out yesterday. Relatively quiet day in markets yesterday. Amid that, we saw both European equities and US equities delivering small gains overall in the market. What was behind those gains was a positive momentum in energy sector, which continues to get a boost from rise in oil prices yesterday. To counter that, we saw financial sector continue to weaken and weighing on overall sentiment. If you focus on the bond market, sideways movement again, we saw some drop in yields in US treasuries, but we saw a modest widening in the gilts yield yesterday. This weighed on dollar sentiment. Dollar overall, we saw US dollar continue to lose its momentum. Has been quite weak since the start of the year, and that weakening momentum has continued yesterday as well. But what is also been behind this lackluster market moves is, as Paul highlighted, investors are waiting for the earnings season. The big tech will be reporting between today and Thursday. We have Microsoft, Alphabet, Amazon, and Meta, Facebook parent, all expected to report weaker earnings, Q1 earnings. Again, the fear is that overall weakening in advertising revenues plus the higher borrowing cost will weigh on these sentiments overall. But focus for today, we thought it's important that we focus today on the improving German sentiment. We saw IFO sentiment continue to improve for the sixth consecutive months and back up to the level and highest level since February last year. What is behind those improving sentiment in Germany? It's again the positive momentum from the construction and from manufacturing activity continues to improve. The softening in supply chain constraints, the easing of the inflation and purchasing price indices we have seen over the past few months have continued to provide a boost to German activity. That along with overall services sector, which we have touched upon in past couple of sessions, the PMIs and the services have continued to boost the positive momentum in Europe. That we believe should continue to boost European markets and provide a support for European markets ahead of in the coming weeks. What it also means that it also provides ECB, the central bank in Europe, to continue with their hiking path, to continue to tackle the inflation pressures we have seen. But we'll see how this interplay works out. But as always, we'll continue to keep you posting on new market developments. But for now, we'll leave it there. And thank you very much for watching Morning Markets.